up, everybody? Today we are talking about fair rental value, RFV, and I'm calling this the forgotten number. Now, I've done a lot of pastor, missionary, clergy tax returns. I've seen tax returns from the previous year because new clients, I always get their prior year tax return. And I very rarely, if ever, see anyone actually pay attention to this fair rental value number. Why is it so important? Well, your minister's housing allowance provides you with a very significant benefit because that portion of your pay is not subject to income tax. Now, I've got a series of videos here on minister's housing allowance because there are several often misunderstood or just simply forgotten, like this one, concepts or rules that you have to follow with the minister's housing allowance. So how does this fair rental value work? Well, your minister's housing allowance is actually limited to the lower of three numbers, all right? Most of the time, I see people, they get their W-2 from their church or their missionary organization, and the housing allowance is on there, $30,000. They go to do their tax return, they type in the $30,000, and they move on, all right? That's not correct. It could end up being the correct number, but you've got to go through this calculation. The first one is what's designated. This is what's on your W-2. So you get your W-2 from your church or missionary organization, it says $30,000. That's number one. You cannot stop there, though. The next number is what you actually spent providing a home for your family, okay? So we'll come back to that in a second. And then the last number is the fair rental value. Very often, probably most of the time, I see people who will look at the first number, calculate the second number, and go with the lower of these two numbers, or to be honest, they just kind of say this number is that number, and they go with that. All right, so those are what I see most common. No one looks at the fair rental value. So let's go through this calculation. Let's say actual. This is your mortgage payment. This is your utilities, so water, gas, and electric bill right there. And then $7,000 is other. We're going to say repairs, maintenance, cleaning supplies, some of these other things that go into providing a home for your family that you're allowed to count towards your minister's housing allowance. And that's going to add up to $36,000. So if we look at this, we would say, okay, my W-2 says 30 and my actual is 36,000. I'm stuck with the 30 because that's what was on my W-2. But we forgot to calculate fair rental value. Now, one big key here is this fair rental value is the value your home would rent at furnished. So most of the time when you're looking at rental values, you're looking at an unfurnished home where you're going to bring in your own furniture. But you can actually take the fair rental value of a furnished home. So what it would take to rent your home with furnishings already in it. All right, so let's say you look at Zillow, and I usually do this. I'll go to Zillow and Realtor.com. I'll look at both of them. They have different estimates. I'll average them out, and that's typically what I go with when I'm trying to calculate this for people. Much more easy to back up and to prove if you go the route of actually getting a realtor friend or someone you know to give you a valuation on on their letterhead, then you can definitely go with that. But I'll go to Zillow. Let's say Zillow says $2,000 a month is what your house could rent for. That's unfurnished, okay? So that's $24,000. Your utilities, well, it's the same thing. It's what you paid for utilities, so that's still the same thing. And then you have to add in, you don't get the repairs and stuff. Now, if you did repairs, you do that. You can get that. You still get some cleaning supplies and stuff like that because you're providing the home. Anything you got to pay for out of pocket there, you can count. But this $5,000, and this one's where it gets very subjective on the fair rental value. But for right now, in this example, we're going to use $5,000 for what it would cost to rent your home furnished. So this is to rent the furnishings above and beyond what it would cost just ordinary rent of your house. Now that's going to add up to $32,000. So if we look at our first example now, we have 30 on the W-2, we have 36 actually what we spent, and we have 32 for fair rental value. All right, well, we're limited to the $30,000. That's the lowest number. Let's say the W-2 is designated at $35,000 instead. All right. So the W-2 says $35,000. What we actually spent is $34,000, and this fair rental value is $32,000. You're going to be limited to $32,000. This is the example where most often people don't calculate that number, but they would be limited by it, and therefore they would prepare their tax return incorrectly. And the last example, the W-2 is 35, what you actually spent is 34, and again, we're just adjusting this for the sake of the example. Let's pretend it's 34, and the fair rental value is 37. Most often, the fair rental value is going to come out more than your actual. But I've seen where it doesn't, because there's a lot of things that you might put in this actual, especially if you had large repairs or you remodeled and you're trying to add that into your actual to bump up your MHA over here on what you can deduct, then you might end up very likely being limited by the fair rental value, like in this example. But pretty often, the fair rental value is going to be more than your actual. And so in this particular case, the W-2 says $35,000, your actual is $34,000. Fair rental value is $37,000, you're limited to your actual. Now, in this case, you put the $30,000 on there and you missed out. You missed out on $2,000 because had this been 32 or 35, you could have gotten 32. So there's $2,000 that you missed out on excluding from your taxable income. Well, let's say you're in the 12% tax bracket, that would be $240 of taxes that you paid that you didn't have to pay, all right? So you cannot kind of go back and increase it. You're limited to what it was on your W-2. Now, if your W-2 is higher than the other two, what would happen here? Well, in this particular situation, if you didn't calculate fair rental value and you went with the W-2 of $35,000, you have actually underreported your taxable income by $3,000 because you should have limited your MHA to 32. So you've underreported your taxable income by $3,000. And again, in the 12% tax bracket, that means you would have underpaid your taxes by $360. And if that ever gets caught, you'd owe some interest and penalties on underpaying your taxes there. Now, the $35,000, $34,000, $37,000, let's say you went with the 35 here. Well, if you go with the 35 and you were supposed to be limited to 34, that's $1,000 of income you underreported your taxable income by, and so you would have underpaid your taxes by $120. Now, these are pretty small amounts. They're probably not going to ever come into play, to be honest with you, but you can see how if these numbers get a little bit bigger and your tax rate's a little bit higher, this could get fairly significant pretty quickly, especially once you start adding on interest over time if the IRS comes back in and audits you later and finds this out several years later, where there's going to be some interest and maybe, not necessarily, but maybe some penalties as well. So I'll mention here one other thing is when your W-2 is higher than one of these other two numbers that you're going to be limited by. So if your W-2 is $35,000 and you're limited to $34,000, what's going to happen on your 1040, where your wages are reported? So your wages are going to be your pay without your MHA. Well, on that line, it's going to say excess allowance, all right? And it's going to say $1,000, and then that line will be $1,000 higher than what box 1 on your W-2 is, because it's going to add back the $1,000 to your taxable income. So make sure you see that. Now, when it does that, there's actually no problem with that whatsoever, okay? So here's a planning tip. Remember, if your W-2 is lower than these numbers, there's no way to go back and get that benefit back. You're just going to have paid extra income tax for no reason that you didn't need to pay. So having your W-2 designated MHA allowance too low is going to cost you tax savings. But having it too high is not a problem at all as long as you account for it and add back the excess on your tax return. So better to have it too high as long as you're going to actually do the calculation and pay your taxes correctly than to have it too low. So there's a planning tip there. Again, my name is Brad. I'm with Wooten CPA, and my goal is to bring peace to your finance and tax responsibilities. Don't forget to subscribe and hit the bell so that you're notified when other videos come out. I appreciate you watching.